Welcome to Money Talks with Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, U.S. stocks rise as the Fed stays on hold. The Fed forecasts a dimmer economic outlook for the U.S.
I think we're not going to be in any hurry to move. As I mentioned, I think we're well positioned to wait for further clarity.
How might the Bangko Sentral decide next? We speak with Manulife Investment Management and Trust Corporation's Mark Canizares. And in Women Who Lead, we speak exclusively with World Travel and Tourism Council President and CEO Julia Simpson from London. The U.S. Federal Reserve leaves interest rates unchanged for the second straight meeting as uncertainties surround President Donald Trump's policies. The Fed has adopted a wait-and-see approach on the economy as it held interest rates at 4.25% to 4.5% since January, following a series of rate cuts late last year. For months, Fed Chair Jerome Powell signaled that the central bank is in no hurry to cut rates. The Fed is dealing with a host of policy changes under the second Trump administration as it continues to stamp out stubbornly high inflation. Fed officials share new economic projections, which now include a higher inflation outlook this year of 2.7% from 2.5% in January. Policymakers also expect the U.S. economy to grow modestly at 1.7%, down from their December projection of 2.1%. In recent weeks, the Trump administration imposed a wave of tariffs on America's largest trading partners, slashed the federal workforce, and took a hardline approach on immigration. Now, these policies have caused, in Powell's words, an unusually elevated level of uncertainty that led to the Fed's decision.
Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. It can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory. And that can be the case in the case of tariff inflation.
Just half an hour ago, China's central bank has also kept its lending rates unchanged. The People's Bank of China holds its one-year loan prime rate, or LPR, at 3.1% and the 5-year LPR at 3.6%. The central bank is following the footsteps of the Fed as China deals with global trade tensions, sluggish household spending, and a real estate slump. Japan's central bank also holds monetary settings steady on Wednesday, with policymakers worried about the effects of global trade tensions on the Japanese economy. The Bank of Japan maintains its target for the overnight call rate at 0.5%, a move widely expected by economists. BOJ Governor Kazuo Ueda says uncertainties over U.S. tariffs threaten to overshadow Japan's progress in achieving the central bank's 2% inflation target. Analysts say the Bank of Japan may tighten monetary policy at a slower pace than markets anticipate, as tariffs could ruin Japan's economic recovery by making Japanese companies cautious about spending. While markets have responded positively after the Fed's announcement Wednesday, the Dow is up by nearly 1%, S&P 500 rises by over 1%, and the Nasdaq climbs by nearly 1.5%. The benchmark 10-year Treasury yields inched lower to about 4.25% from 4.28% at the previous close, and gold prices have risen for a 7th straight session at $3,035.98 a troy ounce. If there's one asset that glitters in this environment, very volatile environment, it is gold. Just take a look at this chart here. Spot gold continuing its ascent north of $3,000 per troy ounce. Now that relentless march up began in March 2024, right about here, when gold reached 2,000. And after a 3.5-year consolidation, that trend higher had continued up. Ron Acoba of Trading Edge tells us that gold may be due for an interim pullback, But the bull cycle, he says, remains intact. Let's take a look at U.S. futures and see how they're pointing. It looks like a higher open later this Thursday, New York time. The Dow is up by about a 0.25%, S&P up by about 0.3%, and the Nasdaq up about 0.5%. Let's take a look at the Asian markets and see how the first few hours of trading are trending. It looks like they're also opening higher following the Fed's decision to keep rates steady. The ASX 200 up by about 0.7%, Kospi rising by 0.6%, and Japan's Nikkei not trading today. It is closed for the vernal equinox holiday, but it ended Wednesday's session down by 0.2%. And let's take a look at the Philippine markets and see whether it's also trending higher. PSE opens up slightly by about 0.1% at 6,315, clearing that 6,300 mark. The stock market gained yesterday by nearly 0.5%, returning to that 6,300 mark. As for the Philippine peso, it's also opened stronger at 57.22 the dollar. Peso closed yesterday slightly weaker at 57.30 to the greenback. But it's now for more here in the studio. Mark Canizares, the head of equities of Manulife Investment Management and Trust Corporation, which manages over 185 billion pesos. So good to see you again, Mark,
Hi.
and
Hi, good
welcome
morning.
to the program. So I was just talking about gold there. So it's it time to buy gold? I mean, it looks like the real deal.
Well, I think the price run-up in gold also reflects the volatility that investors are afraid of or are expecting for the remainder of the year. So the run-up was expected. But as you can see, I think you're talking about the Fed maintaining rates today, and some central banks have also opted to keep rates steady. And I think that's a welcome development to markets. So right now, what we're happy with is that there's some stability in the market. At least there's a pause. There's something that we can look forward to. But I think in terms of rate policy settings, we are still expecting that it will still be about 2 cuts for the year. It might just move forward a little bit.
You know, it's quite amazing that the Fed hold actually gave the markets a little bit of a support, because when the Banco Central kept rates steady, the markets went down.
Correct.
It didn't like what it didn't do. How do you think the Fed communicated what it should? And how do you think that will be taken by the markets here, especially the Banco Central when it meets on April 10th?
Well, I think it was different. So when the Banco Central did not cut as expected, that was the surprise. But remember, when the Fed came in last night, it was already a few weeks into the tariff changes that we've seen in the US, right? So there were a bit of uncertainties that maybe the Fed was also trying to be more tentative, waiting for what will happen, and they also downgraded growth expectations for the US, and we're expecting that inflation would be higher for the remainder of the year, again, because of what the tariffs might do. But for the Philippines, it's a little bit different. Inflation for February, I think, was at 2.1%. And remember, we were actually moving ahead of the Fed in August. Before the first rate cut by the Fed, we moved ahead. And people at that time were concerned, should we cut ahead, should we cut after? But it seems there's space for the BSP to either wait or be ahead by a few months. Remember, monetary policy has also a few months lag. So that should give the BSP a bit of space in terms of how their policy setting meetings will be in April.
Yeah, the running joke was, is it the Banco Central moving ahead and the Fed moving in lockstep
Correct.
with the Banco Central? But there's going to be an inflation report on April 5th. How critical will that be? Apart from the fact that the Fed already communicated what it should, held on steady, inflation expectations are higher, probably growth slower. How do you think the central bank will decide?
I think the expectations for local policy rates is for at least about 25 to 50 basis points. As I've said earlier, it's moving a bit after that surprise no cut in the early part of the year. But the macro numbers, I think, are supportive of what the BSP will be doing. We would not be surprised if they cut or if they maintain rates. There will be a little bit of room on that side. On the inflation front, if you're going to the market or the supermarkets, rice was an issue last year. But when we've done our checks, you can see falls of as much as 10, 15% versus the beginning of the year. So that would have an impact because food is about 10% of our inflation basket. But energy prices are expected to also go up because it's the summer month. So that should provide an offset. So in terms of where your basket will be, the inflation print might actually be more manageable, be trending more lower for the remainder of the next few months at least.
Okay, we got about a minute. Where then do we deploy our money? We've talked about gold, pretty speculative down there. Are we going to go for the defensive plays, interest rate sensitives? Whereabouts with corporate earnings out?
So far is that defensives are actually in vogue for the first half of the year at least. You've seen banks move higher in terms of their share prices. Utilities are also there. Telcos are also there. So there's a little bit of defensive that's built into portfolios right now, mainly because of the uncertainty. But going towards the second half of the year, you're seeing a lot of these beneficiaries of lower rates, lower inflation print, higher incomes come into play again. So maybe the second half of the year might be the time to revisit consumer staples, consumer discretionary names that might benefit actually when all of these come down. And remember, we have midterm elections that's also expected to boost consumer spending, at least for the second half of the year.
Looks like you're going to be busy rejigging that portfolio towards the second half of this year. Thank you so much, Mark. Really appreciate the time. Mark Canizares joining us from Manulife Investment Management and Trust Corporation. And more conversations coming up here on Money Talks. Canon Marketing Philippines talks about what it's like doing business here in the Philippines. And later on, my conversation with a woman at the helm of the World Travel and Tourism Council. back to Money Talks. I'm Cathy Yang. The Bangko Sentral ng Pilipinas may cut interest rates in April. Finance Secretary Ralph Recto says inflation is under control, making a rate cut likely in the next Monetary Board meeting on April 10th. The Bangko Sentral held rates steady last month after 3 straight cuts in 2024. Recto sees room for a 50 to 75 basis point cut this year to help boost growth, consumption, and investments. He expects the economy to grow at least 6%, citing strong fundamentals, infrastructure investment, and election-driven spending. The finance chief says former President Rodrigo Duterte's arrest will not affect investors and that fiscal reforms remain on track. PLDT, through its unit Vitro Inc., has partnered with global telecommunications and network infrastructure provider Nokia to upgrade data centers and make them artificial intelligence ready. Both companies signed a memorandum of understanding to improve network security, scalability, and efficiency using AI-driven solutions. PLDT says the partnership will leverage Vitro's world-class data center infrastructure and Nokia's advanced network technology. PLDT shares now trading up slightly from yesterday's close. Forever 21 stores in the Philippines will continue its operations despite its U.S. retail operator filing for its second bankruptcy. F21 Upco LLC filed for Chapter 11 protection on March 17th because of debt, inflation, and growing competition. Forever 21 says the filing only affects U.S. stores. International locations, including the Philippines, are not part of it. Forever 21 Philippines, run by SM Retail, will continue business as usual. The retailer first filed for bankruptcy in 2019, leading to the closure of several international stores, including locations in Tokyo and Portugal. For more on these stories, check out Business World Online. In our continuing conversations on what it's like doing business here in the Philippines against the backdrop of local inflation pressures and global policy uncertainties, we speak with Japanese multinational corporation Canon as the imaging and printing solutions company plans to grow more here in the Philippines. Anuj Agarwal is the president and CEO of Canon Marketing Philippines, which ranks among the top 500 of the Philippines' top corporations. He joins us here in the studio. Good to have you with us, Anuj. Thank you so much for joining us.
Thank you. Good morning, Cathy.
Yeah, so
nice
what's
to be here.
demand like for the business-to-business and business-to-consumer operations of Canon? Because we're talking about printing and imaging solutions.
Yeah, demand is, we are expecting a continuous growth in the demand. So yeah, we had a setback during the pandemic period. As you know, most of the people went back home. So the B2B demand had a setback during that time. However, B2C demand really shot up during that period. So, but after the pandemic, we are seeing the demand coming back to the market, and we are experiencing a continuous growth over the last couple of years.
And what do you think is spurring that demand?
Yeah, it's a pent-up demand, if I can say. So B2B, when in the pandemic, the offices were almost closed down. So now we are bringing people back to office. Even in our office, now we are working almost 4 days in office, 1 day in from home. So I understand that most of the organizations are working like that. So when B2B demand has gone up pre-pandemic level, after this back to normal, I would say.
And is that growth stronger than the rest of the ASEAN region when you talk about Canon Marketing Group in Asia? I mean, where do we stack up? Because we're one of the fastest growing pre-pandemic. How do we compare now?
It won't be right for us to compare with other countries in Asia, especially because every country has its own unique characters. So, for example, Asia is a unique situation where few countries are developed countries and few countries which are developing countries, like India, Philippines. These are the developing countries. So the opportunity for growth is surely much higher in a country like India, Indonesia, Philippines, and whereas the developed country, where Hong Kong, Singapore, the situation is different. So we are doing much better as compared to our peers in the Asia.
And in a midterm election year, I'm thinking that there's a lot of demand coming through for imaging and printing campaign paraphernalia, flyers, what have you, whatever goes on in an election process. Has that given a bump up to both the B2B and B2C business?
Yeah, election, it's a good thing for us as a direct benefit and indirect benefit. as you rightly said, indirectly we do expect to gain because of a lot of election media, election pamphlet and brochures and all those things. But we are directly benefiting from the election also because we are working through our partners in printing the ballots. So last week only the Commissioner of Election, Comilac, made an announcement that where we were instrument in printing 68 million ballot for this midterm election. And Canon, they mentioned they use 4 machines of Canon in printing those ballots in addition to one of our competitors.
So does that mean more hires perhaps this year, or maybe in the next 2 to 3 years, given the growth that you're seeing post-pandemic?
Yeah, we are expecting a reasonable growth this year, and in the last few years we are growing every year.
So there will be more hires?
Sorry?
More Filipino hires?
For?
New jobs?
Yeah, jobs are like it. Obviously, when the business will grow, the jobs will grow. But at the same time, we are doing a lot of optimization and improvement in productivity. So it's not about the number of jobs, it's about the quality of jobs. So what we are focusing is in the improvement in the quality of jobs of the people and quality of life of the people.
All right, before we go, give us a timeline for the printing of the ballots.
The ballot printing is already finished as per the announcement made by the Commissioner of Election last week. So it's already done.
All right, we're just going to wait for the process then.
Yeah.
Thank you so much.
Thank you.
Really
Thank you.
appreciate the time.
Nice to be here. Thank you very much.
Anuj Agrawal of Canon Marketing Philippines joining us. At the helm of the World Travel and Tourism Council is a woman leader who has seen it all, from a pandemic-induced decline in the industry to a recovery that is now being driven by AI. I spoke earlier with WTTC President and CEO Julia Simpson, based in London, who since 2021 has pursued sustainability and technological innovation as key drivers for travel and tourism. She cites neighboring Singapore as a pace setter for global tourism growth.
Asia is doing so well in terms of travel and tourism. I always remind people that, travel and tourism globally represents 1 in 10 jobs and 1 in $10 made on the planet. And the great news about Asia is it is the fastest growing region at the moment. Post the pandemic, we saw Asia was the slower to start. Obviously, China opened later, but now we're seeing some of the big countries and powerhouses in the region really flourishing. Singapore is flourishing, Cambodia, Thailand, the Philippines particularly is doing really, really well.
Well, let me pick up an innovation, Julia, and talk about the super app, because you have the view that AI is going to change the way people travel around the world. But how so?
Now we're going to see some super apps, as we call them. We published a report about megatrends in technology with the Chinese company called Trip.com. And there you're seeing what I call a super app. At the moment, I live in London, and if I want to get an Uber, or I want to go shopping on Instagram, or whatever it is I do, I have to go to lots of different places on my phone. What Trip was saying is, and Trip had something called Trip Genie, is in one place on your phone, you will be able to do everything. You'll get the inspiration for a trip. You may be seeing some beautiful islands from Philippines on something you're watching. You can press a button. It will tell you which beautiful island that is in the Philippines. You will be able to look at how you would fly there, what holiday opportunities there are, what the hotel packages are, and then you could actually book it. And then when you book it, there will be fintech, financial technology, to look at how you could spread that cost.
Sounds really exciting. Have you tried it, Julia?
Yes, well, here in the UK, we don't have as many super apps, but certainly in China, I've seen WeChat and it's, completely mind blowing. But I have seen the Trip Genie. Yes, so I'll give you an example. I was traveling in Berlin with my colleague from Trip, and we saw an amazing monument. And he turned to me and he said, "Do you know what that monument is?" And I said, have to say, very embarrassed. I said, "No, I don't. Here I am, head of travel and tourism. I didn't know what the monument was." And he asked the driver, and the driver, who was local, didn't know either. So he pointed his Trip Genie phone at the monument, and up came all the data. about what that monument was, its history.
What can we learn from our neighbor, considering that the Philippines fell short of its tourism targets in 2024, although tourism receipts had surpassed 2023 levels? Still got a ways to go, though.
And I think Philippines is probably one of the gems of the world, with all the islands that you've got, all the locations that you've got. But Singapore, you're absolutely right. One of the things they're doing is they're centers of innovation, tech innovation, and also in terms of producing renewable fuels. So they've got a big center from Finland called Neste. They're producing sustainable aviation fuel. The other thing that they do is they manage people moving around Singapore so intelligently. Over here in Europe, we've been suffering a little bit. Some people in the summer have been concerned about what we call over tourism, where a lot of people want to go to the same sites at the same time. Well, Singapore is one of the most densely visited and populated places in the world, but they manage it so well. You go around Singapore, and unless you're actually in a street market where there's meant to be a lot of people, you don't feel you're in a very, very crowded place. One of the reasons is they actually have a digital twin of the city, and that digital twin is monitoring constantly where people are moving to, where people are going.
Just as a final bit, Julia, where to in the world have you not been to and want to go and visit now?
Well, it is true. There's so many places. Well, I've been to the Philippines. I love the Philippines, and I love the Filipino people. I mean, when they say about, Filipinos really understanding what it is to welcome someone to your home, I mean, it really surpasses everywhere. So I'd love to go back to the Philippines, because I really only know Manila, and I know all your viewers, Manila's great, but there's so much more. So I want to get back to the Philippines. I also actually haven't been to Cambodia. I would love to go to Cambodia. So, there are a lot of places on my list that I'm sure all of us sit at home with the list that we really want to get to.
That was Julia Simpson of the World Travel and Tourism Council speaking to me earlier from London. And speaking of traveling, here are two astronauts who traveled 195 million kilometers in space, but are now safely back on Earth. NASA astronauts Butch Wilmore and Suni Williams hitched a different ride returning home after a bungled test flight that left them for space for 9 straight months. They were expected to be gone for just a week after launching on Boeing's new Starliner crew capsule in June. But because of the many problems, NASA sent Starliner back empty and transferred the test pilots to SpaceX. They were then supposed to be home in February, but then the SpaceX capsule also encountered problems. Within an hour of landing, the astronauts were out of the capsule, waving and smiling at the cameras as they were taken for routine medical checks. They have to wait until they're off to the SpaceX recovery ship and flown to Houston before reuniting with their loved ones. So the two ended up spending 286 days in space. That's 278 days more than anticipated when they launched, and they circled the Earth 4,576 times. That's about the grandest travel I have ever heard. I'm sure a book's coming up, and they're going to be talking all about it. That is it for Money Talks. I am Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.